Good evening, my fellow Riz Elite members and everybody watching on YouTube. Thank you for joining our market recap webinar. My name is Chris. I am going to be hosting this evening. Riz is unavailable, sadly. I know everybody loves it when Riz can make the webinar, but he can't make it every week, and that's why you've got me. So want to go ahead and encourage you to go ahead and hit that like and subscribe button down below if you haven't done so already. If you're watching this on YouTube, of course, if you're an Elite membership, you don't have to worry about that. All right, enough of that. Let's talk about what's going on. And there really is only one topic to discuss, and that is the conflict in Ukraine right now. This hits very close to home for me, as my wife is from Ukraine. She is Ukrainian. She emigrated here to the United States on a fiancé visa. Her mother is still in Ukraine and in one of the cities that they are currently fighting in. We'll just say it has been a sobering, 72 hours. Let's just put it that way. It's been very emotional here. And as we can see in the market, there has been some emotion as well. Obviously, the attack started on Wednesday night, late in the evening, here on Eastern time, and very early in the morning in Ukraine, right around 4 a.m. Of course, futures went bright red after that, went deep into the red, opened really low on Thursday, but look at that buying pressure. Looks as though people were looking to buy the dip, and that is exactly what happened. We had been, rolling over, things like that, and look at this rally on Thursday and Friday. You would think that something good happened, but I can promise you it did not. I think this is mostly, investors and, big money looking to buy the dip, get in low, which is what you want to do. But honestly, buying on a dip like this, expecting a bounce, is a pretty good way to get wrecked. That's why you haven't seen us enter too many positions this week. Now, of course, if I talk about any positions that we enter, that is merely just letting you know what we are in. It is not something, or I should say rather, that Riz is in. We're not suggesting that you go ahead and get in at this point, but we will just kind of let you know what we were looking at and what we decided to go with. But huge rally here in the market, even with the conflict in Ukraine. My heart and prayers all go to the people of Ukraine. Of course, I have family and friends there myself, and even if you don't, this is an unprovoked attack on a sovereign nation. And I'll just say I have the same feeling as those 13 Ukrainian soldiers on the island that sent a very special message to the Russian Navy. And so I won't say that here, as we'll probably get nicked on YouTube if I would say it. The Russian market, by the way, is taking an absolute beating since they got into this conflict. It seems as though the general public in Russia is not in favor of this. There have been protests across Moscow, St. Petersburg, and across the world opposing the illegal invasion of Ukraine by Russia at this point. And so, the Russian market is hurting. The United States S&P 500 is looking pretty good. Definitely bought the dip here. And what are we seeing as far as the market sectors? Well, basically everything is up at this point. The only sector that is still currently above the zero line is energy. Of course, that's being pushed up there by oil, which we'll take a look at here in a moment. But the rest of things are starting to move back towards the zero line. Financials is leading the pack of those below zero, currently only down 1%. Utilities and healthcare are down about 4.5% and 6% respectively. The S&P 500 in total is down 8.36% this year. I'm sure that kind of makes sense given this downtrend that we're seeing here. And then real estate and tech are really lagging, both down below 10% on the year so far, though everything is peaking up with this huge rally here over the last couple days. Really big moves in the S&P 500, and that was run by oil. Holy cow, we hit $100 per barrel. I've been asking Riz when that was going to happen for quite some time, and it happened on Thursday, but look at that indecision. Holy cow. Just spiked up to $100 per barrel and then got sold off hard. Obviously, a lot of resistance, a lot of selling going on at that $100 mark. Definitely, some hesitation there. Now, of course, if Russia continues to, wage this war, we'll have to see where the price of oil will go. But we ended the day on Friday, looks like down, closed below $92 per barrel. So a bit of a sideways move over the last couple days with this huge spike up here as well. And speaking of indecision, look at gold here. Same thing on Thursday. Everybody jumping into gold, fearing a market crash. And then when the market rebounded hard, everybody sold gold back off right where they started. So really not a lot of movement in gold for the most part. Yes, we had this big intraday swing here on Thursday with the, of course, the news of the invasion. Everybody looked like they were jumping in back to that safe haven asset that has turned out to not be so safe. It was kind of a one-shot wonder. Went up here right to our resistance line right here around 1967 an ounce. Went a little bit above it and then just crashed right back down. Friday did not look too hot for gold either. So definitely not much going on in terms of that. You could have scalped it there on Thursday. Probably didn't, because we're not looking to take gold anytime soon here at Riz Elite. Bitcoin, let's take a look at that, see how that responded. Well, not really at all, to be honest with you. Really not much moving here in Bitcoin. We did have a lot of movement here on the 24th. Which of course is when, things kicked off. But other than that, it's been kind of business as usual. Looks like we tested the 40,000 mark here on the 26th, or earlier today, I should say. And, we kind of came up there and then it rejected off that 40,000 level. So that is holding pretty strong right now. We did have a push above it here earlier in February. Couldn't hold those gains and kind of came back down. Of course, all of the, movement going on, on Wednesday and Thursday, I should say. A lot of movement here in Bitcoin. But for the most part, just a bit of a rebound here, a test of 40,000 and a rejection. We'll have to see kind of where it goes from there. So really not much moving in crypto, all things considered. I was a little surprised. I was expecting a bit more. But definitely did not go where we thought it would go. Now, I mentioned that we had been very cautious in our positions as of late, though we took one trade this week, and I want to go ahead and talk about it, and that trade is AMD. That is a ticker that you should be very familiar with if you are part of Riz Elite, because we have traded this thing multiple times, and by multiple, I mean dozens of times, since the start of Riz Elite, and it is a very, very solid chip company. The computer that I am running right now is powered off an AMD processor. I've been very happy with it. AMD in on this one at 120.30. You can see that my entry was a little bit better with my little green ray here, though I was in quite a bit earlier than Riz was. And that's okay. Huge rally, at least for me, and a very, very strong push on AMD thus far. We're going to go ahead and get in on this one with this nice push over the 200. Very, very strong, nice uptrend here. And, if things go south we take a turn for the worse, zero problem holding this one long term. AMD, one of the premier CPU companies out there, GPU companies as well. They make a pretty solid product. I can't say that I'm complaining at all, and I am more than happy to have their CPU in my computer. Really, really solid chip company, right up there with some of the other ones, and no problem holding this one long term. So, that was the trade that we took on Friday, and I want to warn you guys, in this environment that we've got right now, expect less trades. And now, you may be sitting there thinking to yourself, well, Chris, then why am I in Riz Elite? Well, you're in Riz Elite for exactly this reason. Because you need to understand, just because we're not taking trades does not mean that we are not in the market. Okay, we are still keeping an eye on things. We are tending to our current positions, even if they are in the red, if they're hurting. And by the way, guys, after this monologue, it'll be time for questions. So if you want to go ahead and start posting those, please feel free. But a lot of people think that, we're taking like multiple trades a day and we're slinging stocks left, right, and center. And that's not really what a swing trader does. And I want to kind of kill this concept, because understanding how to trade is so much more important than the trade itself. Knowing why you're getting in at a certain point and why you are taking the setups that you are is the most important, in my opinion, because you need to understand that there is more to it than just technical analysis. I understand that when people ask me questions, on here. I usually rely a bit on technical analysis for, my recommendations as to where to get in or whether they should be getting in or not at all. But there are broader market things that are going on. And obviously right now, the broader market thing and the only thing that is on people's mind for the most part is the conflict in Ukraine. Now, of course, there's a lot of speculation going on out there on the internet, on the web, about other potential conflicts that might be coming in the future, potentially involving a certain nation of the Far East, which, if I mention, we could get flagged by YouTube. I'm sure you all know who I'm talking about. They often like to, make things. And they have their eyes set on another small island nation there, Taiwan. And there's been a lot of people saying like, oh, well, they're going into Taiwan or something like that. And why in the world would we take a chip company if they're doing that? Because, there's no guarantee that anything will happen. But what we can guarantee is what's happening right now, right? So we know that Russia is invading Ukraine. And how that conflict goes, how that is handled by the rest of the nations of the world is going to greatly impact how the market moves. If the war ends tomorrow, that would be wonderful, obviously, especially for the mental health of my wife and every other Ukrainian citizen out there who may be listening to this broadcast. Of course, our hearts go out to you, but the market will react to that news one way or another. And it is so unknown at this point what is going to happen. Of course, this recently we heard that they're looking to disconnect Russia from the SWIFT system, the SWIFT banking system, which of course is a Belgian alliance, basically like a clearinghouse for wire transfers. If you've ever sent an international wire transfer, you've needed a SWIFT code. That's where that comes from. It is an acronym. I'm not going to look it up. It doesn't matter. You can Google it if you want. Basically, what this will do is it's an attempt to cripple the Russians' international economy, for lack of a better term. If they can't perform transactions, then they can't buy and sell goods, and therefore that hurts their economy. A lot of oil transfers go through the SWIFT system with wire transfers and things like that. So this is a direct attempt, rather, to cripple the Russian economy and make this war as painful on him as possible, not only in the loss of manpower, which, if you ask me, the current leader of Russia probably really doesn't care too much about, and more so hit him in the pocketbook and make his people suffer. And a lot of people would say that that is a prelude or a declaration of war itself, though I have to say he took the first step. So that is going to be a big impact on what is going to happen in the market in the following days. Of course, the Fed meeting coming up in March, everybody is looking at that. And, there is some speculation that with this, invasion, that the Fed may push back their rate hike. The Fed meeting is the 15th and the 16th of next month. Everybody was talking 50 basis points. Now there's, potential it might only be 25 because now they have an excuse. Be like, well, it was going to be 50, but now we're just going to do 25 because, well, everything going on in Ukraine and da-da-da-da-da. So that's a possibility as well. Markets may be pricing that in right now. That may be what you're seeing. But I think it's mostly dip buyers and, investors and whales, rather, for lack of a better term, that are helping push the market up at this point. And, going into that. Hey, Ricardo, glad you made it. We're just in the question section. If you want to go ahead and post in your questions, by all means, go for it now. I'm just monologuing a little bit about, how we're going to trade here over the next couple weeks. But as I was saying, guys, with all the uncertainty going on right now with the Russian and Ukrainian conflict, you will see less trades. And don't think that that's just because we're just sitting watching the news. I can promise you we are doing that. But we are also keeping an eye on everything in terms of the market as well. And we'll, of course, keep you updated to that in our updates section and in the general chat. So keep an eye on that if you want to know what's going on, what we're looking at, what we're seeing. But we are going to be more cautious right now. Because if somebody does something stupid or, pushes the wrong button and sends a rocket into the wrong location, things could turn for the worse. And so we need to be prepared for that. So as Riz mentioned, make sure you're building up your cash position right now to ensure that you are insulated against any market flip either direction. Right now, of course, we're kind of more bearish, right now during the short term. Of course, with a conflict like this, it goes well for some stocks, but not for others. But overall, war is not a good thing. Of course, the loss of human life is never a good thing. And, me personally, I was incredibly surprised at the rally on Thursday and Friday especially. But you have to understand that sometimes the markets they act independently of what you think they should do. It's a lesson in psychology is really what it comes down to. It's a lesson in market psychology and how the market views these huge drops and, is buying them up, for lack of a better term. So I want to go ahead and open it up to questions now. I hope you guys have been typing those in while I've been monologuing, but that's why you're going to see less trades. We are being more cautious, and we are trying to help you. That is the short answer. Right now is not the time to overtrade. With these wild swings in the market. I mean, how big was this move, in just 2 days? Let's look. 6% in 2 days. That's wild for the S&P 500. So be very cautious, guys. If you have positions in the green, then you might want to consider taking profits a little bit earlier than usual. And I get it. You're like, but Chris, it could run further. Maybe I could get more. Yeah, and maybe you could lose more too. Maybe you could have a green trade that goes red. How would you be feeling at that point? In a couple days, you'd be like, oh, Chris, why didn't I close that trade? I was up X number of percentage points. And I'll just be like, well, I told you in the webinar, bro. It's one of those things, guys, that you'll never lose money by taking profits. I don't care how big or how small it is. If you can extract money from the market, that is a good thing. And it is what we are here to do. And our guidance right now is to be considerably more cautious. I wouldn't put a whole lot of faith in this rally. That's just me personally. We'll have to see if the market can prove me wrong. I'm always willing to let them do that. Should we consider buying up blue chip stocks on a long-term portfolio? Of course, if you're looking at long-term, absolutely no problem buying the blue chip long-term stocks. Of course, you've got those dividends on some of them, on others not. But you're looking at stuff like, Walmart and things like that. And actually, this is a pretty good entry for Walmart right here, to be honest with you. This 136 level is pretty good in my mind. Though Walmart on a bit of a downtrend lately, but definitely. Looking at some of these blue chips like, Walmart, Apple, look at that bounce on Apple. Holy cow. Some of these solid ones, absolutely. I would have no problem buying them if you're looking at long-term portfolio. You shouldn't have any problem, especially if the market dips again. It's definitely an opportunity for you to go ahead and get in. I'm not suggesting you get into Walmart or Apple. I just used them as two examples. All right, Yas wants us to take a look at CRM, good old Salesforce. Got to manage those contacts, let me tell you. A huge dip here on CRM and a beautiful buy up. Definitely a nice gap here between these, support and resistance levels that we have marked currently and the 50 moving average. Looks like a pretty solid entry, if you ask me, especially if it can hold over this 204 level. Oh, you're red on CRM? Sorry to hear about that. Not sure what your entry is. You don't need to post it in the chat, Ricardo. CRM took a beating here, especially post-earnings, and the bleeding hasn't stopped until recently. So if we hold over this 204, 205 area, I'm going to be pretty confident in it. If it, comes back down here and dips below it and closes below it again, I'm not going to be so confident on it. But if it can hold above this area, absolutely, yes. I definitely like it here. It's a pretty good price for CRM. There's definitely a lot of room to go, even if you just kind of run it back here up towards, like the 230 area. Definitely, a possibility for you. And, let's see, earnings coming up here on the 1st, so please be aware of that. You may want to look post-earnings and see how it does. because this is one of those things. Since let's look here on the old calendar. Tuesday, excuse me, is the first. So that is definitely something you want to keep an eye on. And I wouldn't personally buy it beforehand unless you want to do like a lottery ticket type position. What you could do is you could go in like a quarter of a position size or maybe a third for whatever your position size is, and then kind of see how it goes as far as earnings are concerned. It may gap up and sell off in the first 2 minutes, or it may stay flat and then spike up in the afternoon. It's one of those things we don't know, and it's a lesson in market psychology. It's all about how the market receives those earnings reports, and especially the guidance reports. Those are seemingly more and more important in my mind. But from a pure technical standpoint, I love it here, especially if you can hold over 204. That seems to be pretty important. If you're looking long term, then you could definitely look at it and get it now and hold. It's a pretty decent entry if you ask me. Good old dollar cost averaging. That's some good stuff. There are more people typing. Hey, no problem. Anytime. Yeah, I like it here. Honestly, if you're looking to dollar cost average, this dip is a pretty nice dip. And wouldn't have any problem going ahead and taking some, especially if you're looking to average in further down. So at that point, you're pretty much insulated. If it goes down more on earnings, you can buy the dip and then, average down and then hold on for a bit and see where you can get it to go. I saw somebody else was typing, so I'll let them put their question in here. How about an entry to BA? Or is it too late? Well, let's take a look. Good old Boeing. The 737 MAX. I'm going to be honest with you, I'm not too hot on Boeing right now. If this is something that you really like and you really believe in, then you can do it. But these earnings results have been pretty piss poor, if you ask me, especially as of late. Okay, so they had one good one there, and then it's been all red. Yeah, I'm not going to lie. I'm really not liking it. Defense stock. I would look at Lockheed Martin, if you ask me. I don't know how LMT is doing. Let's look. Okay, so it looks like people have already jumped on the boat for LMT, and that is approached being overbought at this point. I'm not sure how big Boeing's military contracts are anymore. I'm not really keeping an eye on that. I actually do have a friend in the Air Force, and he does some of their contract procurement, so maybe I should ask him. But me personally, I don't like this pattern. This is pretty bad. This is not hot. If it breaks over my resistance line, then it's looking better. It's definitely not overbought. That's true. But yeah. Again, if this $200 dollar area should be pretty strong, all things considered, but you got a lot of crap you got to go through. You got all the moving averages. We've got some resistance here that has been really strong for the last couple months, right around 206. This one is not the best, and Boeing is not doing so good. I understand your thesis. I just don't really like this one, and I get it. LMT looks terrible. It's way overextended, at least with that run, and approaching overbought. Looks like dividends are coming up. Yeah, on Monday, $280 a share and $400 a share ain't nothing to shake a stick at. I know my account can't handle that. I'm trying to think of some other defense contractors out there that would work. I can't think of any off the top of my head except for these two. I just worry with Boeing you're going to be bag holding this for a while, especially with earnings sucking balls, for lack of a better term. And, a 2,000% miss. I'm not sure if that's correct, but if it is, that is horrendous. They lost. They were 10% below on revenue. It just doesn't look good for Boeing. Ever since the 737 MAX, it has sucked. NOC and GD. All right, let's take a look at those. Thanks for posting those. Northrop Grumman. Yeah, absolutely. Again, another $400 stock. Not exactly, cheap or affordable. Definitely not overbought, but yeah, it looks like dividend. We probably missed that. Yeah, it was on the 25th. But again, for a $400 stock, that's a pretty small dividend if you ask me. Let's look at GD. General Dynamics. Yeah, it's way overbought too. It looks like kind of that bandwagon that ship has sailed, as they would say. Yeah, it's going to be tough getting in on a defense thing right now if you think that it's going to run with the conflict. Now, of course, if things escalate and the United States gets involved and we see a broader conflict, then, well, you can just kiss RSI goodbye because nobody's going to care at that point. But even then, I wouldn't be buying at these levels. It seems way overbought to me, way too high and extended. So I get your concept on BA, but I just can't get behind it. But maybe I'll be wrong. If you want to take a small position, you definitely can. I would just be really careful with it. That's right. No war profiteering for you, Fitty. That's a good one. I love it. What is it? The Nicolas Cage movie, The Lord of War, or something like that? Where he's a gun runner. Yeah, I just think BA has got a lot of problems. And I don't know if even a conflict is going to solve it, to be honest with you. I know they've laid off quite a few people. I had a friend in a mastermind group I'm part of, who'd been part of it for over 6 years now. And, it is one of those things that it's just not looking good for the company, to be honest with you. And so just be careful with it if you want to go for it. I mean, 200 seems like it should be pretty solid, but if it cracks below that, then we're in bad shape. I mean, we're in a straight downtrend right now. Now, if you want to, of course, a conflict could shoot that up to, 230 or something like that. Don't quote me on that. It may not go there. But, this is just a tricky one right now, and I'm not liking it. So, awesome. Well, everybody, you know what? Have a great weekend. Try not to spend too much time on social media, guys. I know, and I'm preaching to the choir here, and wish my wife would hear this, but I can promise you she won't be watching this replay. She's been nothing but glued to her phone, and I get it because she's concerned for her family, her friends, and I would be too if I were in her position. But try and get some rest this weekend. We're going to have plenty to do this week, I have no doubt. We will be keeping an eye on the markets, on everything happening in Eastern Europe, and we will, of course, keep you guys aware of everything going on. I do know that they are fighting in Kyiv right now, as well as several other cities around Ukraine. And so, of course, say if you believe in prayer, or if you are religious in any way, please say a small prayer or take a moment of silence for Ukraine. I would greatly appreciate it, and I know everybody who is from there would as well. Hopefully good entries next week, Ricardo. We will definitely be keeping an eye on everything, and we will keep you guys appraised of everything. I want to thank everybody who made it out to the live webinar, and if you are watching this on YouTube and you haven't clicked the like and subscribe button, what in the world are you doing? What's taking you so long? Click on it. It's free. It doesn't cost you a thing, and it helps the channel grow, and we would really appreciate it. So from all of us here at Riz International, that is it for this one, and we will catch you in Discord on Monday.